can. Let's keep talking all things budget. And as we know, the opposition leader's reply is in Parliament tonight. Let's have a chat about what is in these papers to help with housing affordability. Let's have a chat here in the studio, again with Anthony Landahl from Equilibria Finance. Housing affordability, it's such a prickly one, is it? Either you're looking or you've got kids or grandkids, it's always front of mind. Did you see anything in the budget to make a difference?
Yeah, housing affordability is a massive challenge at the moment for a lot of Australians, first home buyers particularly. And the budget had some pretty specific measures around housing affordability, mainly expanding existing programs with an extra 50,000 spots towards the Home Guarantee Program, Family Guarantee Program, and they've also expanded it to a Regional Guarantee Program, which is interesting. But essentially it's decreasing the size of the deposit that a first home buyer, or in some cases someone who hasn't owned a home for a period of time, will need to get into the market. It's really a demand side sort of initiative where it's trying to get people into the market maybe a little bit earlier than they needed to. And one of the biggest challenges with housing affordability is the deposit. For example, you may only need for an $800,000 home, which is pretty rare these days. It takes the size of the deposit from 20%, which is $160,000, to $40,000, for example, subject to meeting certain criteria.
Actually, that's the catch I was going to ask, because just because you only need 5%, that doesn't automatically mean it gets rubber stamped by your local bank.
No, it doesn't. Not every bank has access to providing these. And secondly, you've got to meet certain criteria. For example, in New South Wales, the threshold is the property has to be under $950,000. In Victoria, Queensland, it's a little bit lower than that at $850,000 and $750,000. So there's certain eligibility criteria you need to meet, as well around income you earn as either a single or a couple. There's certain thresholds to meet. So not everybody's going to be able to access it. And to be frank, some of the thresholds are a little bit low in terms of the price points in the cities. And thirdly, these places, the supply of these and the provision of these gets snaffled up very quickly. So it's not easy for everyone who may need these to actually access them.
So it's not just first homeowners. You just briefly mentioned it. What's with the gap? You're out of the market and then you're back in. What's that mean in reality?
Yeah, the new program is for regional areas. So the home guarantee, the first home buyer is specifically for first home buyers. The home guarantee program is for single parents. They can have been out of the market for 5 years. And the third one, interestingly, is a target on regional Australia. That's for first home buyers or someone who's been out of the market for 5 years. I guess we're seeing a surge in construction, we're seeing a surge in demand in regional areas of Australia, and they're very much looking at trying to help people with those relocations, whether they're a first home buyer or they're trying to come back into the market. So that's going to, I guess, help boost some of those people moving to those regional areas with a lot of construction and a lot of activities in some of those centres as people have recalibrated their life and their work balance, I guess.
Yeah, I guess two things come to mind. I mean, it's a budget policy. You get some people in, you walk away. Now, a home is a very long-term, expensive commitment. Yeah. What if you get in at the top? What does that mean for homeowners going forward?
Yeah, generally a home is a long-term purchase, and like with any asset class, if you look at the history of it, over time you're generally going to get that capital growth. So if someone's generally in there for a longer-term hold, then generally they're going to see an increase in the value of that asset. I guess where some people might get caught out is where they're trying to time the market. They might be trying to time a sale and then a purchase down the track. So a few people have been caught out recently with that, where we are starting to see the market soften up. It's probably not coming through in the numbers yet, but the last 2 or 3 weeks we're definitely seeing people who might have thought they were going to get a certain price, they're getting offers a fair bit lower than that. Now, if they've already purchased a property to move into, there are some people getting caught out with funding issues around that. But as you touched on before, the affordability is really just looking at the demand side, and there's a big issue with supply, which has been driving up the market. We're starting to see more supply in the market, and we're also starting to see some of those prices soften.
So what kind of supply? Because it takes a while to build, and a couple of construction companies have
Yeah.
rolled over, so that's not really helping. But just in terms of existing stock, we saw a big rush of listings. What's going on that front now?
Yeah, well, from a budget perspective, just to touch on that, there was another $2 billion announced to build essentially affordable housing projects, which might provide 10,000 more homes in that program. They've already built 15,000, but as you touched on, that's going to be over a period of time. The main thing with the supply is opening up new areas, particularly in regional areas, or expanding throughout Sydney, but also people who may have been looking to sell their properties are now bringing them on the market. So we're actually seeing an increase in supply of existing properties as much as, I guess, opening up new areas for development. So that's where we're probably seeing the softening a little bit in the market. In terms of longer term supply issues, we'll probably see from the Labor Party in their budget reply, probably some more initiatives around social housing and affordable housing on the supply side, where there's actually construction of housing as distinct from helping people get into a home where they still have to service the loan. We're in a difficult environment with rising inflation, interest rates set to move.
Yeah, just a quick one. Are people having that conversation? Fixed rates are on the rise, RBA sort of tiptoeing. Is that starting to enter your conversations?
It's very much front and centre of conversations. Interestingly, for existing mortgage holders as much as new home buyers, they're looking at, do we fix? Fixed rates are now 1 to 1.5% higher than variable rates. They're doing those numbers in their head. They're recalibrating their repayments. Bearing in mind, when people originally apply for the loans, there's certain buffers put in to ensure that rate rises can be absorbed by the mortgage holder. But yeah, it's certainly front and centre. We haven't seen as much flow through impact new buyers because a lot of them are just looking at variable rates, which tend to track the RBA. The RBA hasn't moved yet. It's sitting patient with waiting for wages growth. Obviously the unsettling war over in the Ukraine and other factors are holding the RBA. The RBA is holding their line on rates at the moment against a lot of those inflationary pressures that are coming in, as we've all seen.